Good day, sir. Among the three topics, I will be discussing the investment of debt securities. So, why is it important to study and know this topic? Because, for example, I am looking for an investment opportunities that can offer consistent payments and higher interest payments than I would earn by just leaving my money in a savings account. So, debt securities is one of my option that can utilize to grow my money. So, why and how is that possible? Let us understand the concept of the investment of debt securities by knowing first its definition. So it is defined as any contract that represents the right upon the holder to receive cash from the issuer or an obligation of the issuer to pay cash to the holder thereof. Meaning there is an agreement that is created between the two parties. This is what we call the debtor and creditor relationship. So who is the two? Si debtor, siya yung nangungutang, and si creditor, siya yung nagpapautang. By an accounting approach, especially in recording transaction, we should always put ourselves in the shoe of a business entity. This time, in investment of debt securities, ang perspective na tinitingnan natin is at the creditor side. Why? Because siya yung naglalabas ng pera as if ito ay investment. Then the creditor will receive capital and interest as return of investment. Then the definition itself also states the right upon the holder to receive cash from the issuer. It means ang holder of contract is yung creditor since naa sila'y agreement of the stipulated interest rate and the value over a period of time. While ang holder of money that received from the creditor is si debtor na naa siya'y obligation to pay his debts together with the interest. So in short, debt securities is a type of financial asset that is created when one party lends money to another. So most common example of that is ang bond, which is a long-term debt. Example is where an investor lends money to government or organizations over a set period of time, and once the bond reaches the maturity, the bond issuer will return the investor's money. So that is the concept of debt security. For example, is where an investor lends money to government or organizations over a set period of time, and once the bond reaches the maturity, the bond issuer will return the investor's money. So that is the concept of debt security. So there are three characteristics of debt securities. It consists of maturity value, the amount due and payable to the holder of financial obligation. There is maturity date and periodic payment of interest. Ang kalayaan lang sa debt securities to equity instruments, ang debt securities, it is tend to resemble loan contracts between the borrower and the lender. So, mostly na ay mga reimbursement over time. While sa equity instruments, they do not receive any reimbursement because they are based more of an ownership in a company or organization, and they often acquire profits by buying and selling equity instruments. So there are also three classifications of debt investments. So natay fair value through profit or loss, fair value at other comprehensive income, and at amortized cost. These are the three bases of classifications that we need to know in order to compute for the debt investments, because each of them has different accounting approach na sila klase-klaseng mga business model and contractual cash flow that would help us to know what concept we need to apply in computing for debt investment. So let us talk first the fair value through profit or loss. So ang iyahang business model is selling financial assets, taking advantage when the profit taking arises. So for example, ang isa ka kumpanya, they will sell bonds in the near term, taking advantage of the fluctuations in value for profit taking. So that is FVPL, which is more on trading or selling financial assets. So these are the important concepts that I have learned in the video when it comes to fair value through profit or loss in computing for debt investments. Number one is ang initial measurement. It should be measured at a fair value. So how would we know that it is a fair value? there are three ways. Number one is stated na siya sa problem, ang total amount. Number two is the quoted price. The quoted price most usually comes siya in the numbers like 90, 95, 100, 98. Then it means it is equivalent to percentage. Number 3 is ang effective rate or pag-compute nato sa issue price. It is computed at present value of the face amount added by the present value of periodic payments or periodic interest that is either annually ba or semi-annually. Then the total is multiplied by the effective rate, and ang periods na atuhang gamiton is the remaining periods, not the periods that are used. And number 2 is the transaction cost. It should be treated as an expense, and mapapasok agad ito sa profit or loss section in the statement of comprehensive income. Number 3 is the interest income or interest received. How to compute? Outstanding face amount multiplied by the stated interest rate or the nominal rate. So there will be no amortization in the fair value to profit or loss. So the journal entries will be debit cash if na-receive na nimo, if wala pa interest receivable, then credit interest income. So walay amortization ang FVPL, but on the other hand, naa siya sa mga fair value at other comprehensive income. Then, if naay disposal or changes in fair value, it is presented in the profit or loss. Ang iyang financial statement presentation, it is classified as current assets, dili non-current assets. And ang iyang carrying value is equivalent to fair value. We already know what ways na makabalot nga mao ni siya ato ang fair value. Then if we would like to know what is the fair value of the bond, if there is a question in the problem, then ang pagcompute ana is a face amount multiplied by the quoted price, that would be your carrying value. Then another concept that we will need to know is the unrealized gains or loss. So nganong naa siya ang ani, because it usually happens when there is a changes in fair value. So if there is a changes in fair value, we need to compute for the unrealized gains or loss through comparing the fair value and comparing the balance per book. So what is that balance per book? That is our initial measurement, and we should not always base it sa mga initial cost or initial measurement, because we have to see if there is an acquisition of investment or naabay sale or disposal of investment on that current period, then we have to account that also. So if that fair value is greater than the balance per book, there will be unrealized gain, and if ang fair value is less than the balance per book, there will be an unrealized loss. Now, last thing in knowing the gain or loss in sale, we have to compare the proceeds or katong bonds that were sold to the carrying value. We already know that the carrying value is the face amount multiplied by the quoted price, that would be your carrying value. If that results to negative, that will be loss on sale. If not, that is a gain on sale. So we are done with the fair value through profit or loss. At this time, designation naman ng fair value at other comprehensive income. So ang iyang business model that we need to know in order na makabaluta ug unsa nga concepts that we need to apply in computing for the debt investment. Iyang primary intent for the FVOCI is to hold for that investment and look for a big opportunity to sell. So there is an hold to collect and sell. Iyang contractual cash flow is solely payments of principal and interest. So these are the important concepts that we also need to know. Same as the FVPL. Initial measurement ng FVOCI is recorded at cost, which is consists of the transaction cost plus the fair value compared sa FVPL that it is recorded at fair value. Ang transaction cost which is attributable to the acquisition of investment is capitalized since na-add mo na yung cost sa initial measurement pa. Compared sa FVPL, it is treated as an expense. While ang interest income in FVOCI, it is computed as carrying value multiplied by the effective interest rate, while sa interest received is same as sa FVPL, which is outstanding face amount multiplied by the stated interest rate. If there is a disposal or changes in fair value, of course, it is presented in the other comprehensive income section of statement of comprehensive income, and ang financial statement presentation ng fair value at other comprehensive income is classified as non-current assets. Then the next one is the carrying value. Since it is still fair value ang investment, same as sa FVPL, equivalent siya sa fair value. And there are also three ways that I've also discussed to know kung unsa tong fair value, depending on the problem, faced amount or the total amount, then the quoted price and the effective rate. Then the next important concept that we need to know is the unrealized gain or loss, if it is due to changes in fair value or nag-accumulate ending balance. So if it is due to changes in fair value, it is presented in statement of comprehensive income in the other comprehensive income section, meaning for that period or for that current period. While sa cumulative ending balance, it is presented in the shareholders' equity in the statement of financial position, and meaning it is for the current period or prior period, from the word itself, cumulative. So how to compute for the two? So sa cumulative, it is the fair value as of the balance sheet date and the amortized cost as of the balance sheet date. It results to unrealized gain if the fair value is greater than the amortized cost ending balance, and unrealized loss if the fair value is less than the amortized cost ending balance. So it is good to compute first the cumulative because we can use it in computing the unrealized gain or loss due to changes of fair value. So how to compute the unrealized gain or loss due to changes in fair value? First is the unrealized gain or loss ending balance, and the unrealized gain or loss before adjustment, yung pinakauna. Then it results to unrealized gain current period if it results to positive, then negative if unrealized loss current period.